The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So, my name is Darrell Martin right here on TFNN. Don't forget you can listen to us at TFNN.com. Tiger TV right there. You can see our screens and our charts as we're going through the markets each day. And you can also hear us around the clock, but also we also broadcast on your mobile phone. A lot of people don't know that. If you go to TFNN.mobi, you can listen to us anywhere you are, out in the car, lunch break, whatever. So definitely check us out. All right, let's see what we got happening right now. We got the S&P. It is up 4 points. We have the Russell up half a point. Nasdaq's up 17. Dow's up 20. We got copper right now. It's pretty flat on the day. Gold is down about 0.5%, down 6 points on the day right now. Silver's down over 1%. Natural gas pretty quiet at the moment, only down about 0.2. We got oil up a mere 13 cents. Corn right now is deciding to move a little bit, though. It's up 7 points. It's a 1.5% move. We got soybeans also up 1.5%, up 22 points on the day. Checking out euro dollar. It is currently down about 19 pips. We got the Aussie dollar down 5. Pound dollar is currently down 10 with dollar franc up, pound dollar's up 10 with the dollar franc up 19. Dollar CAD is down 4. Dollar yen is up 14. We got a Aussie yen is up 25. Euro yen up 9. And pound yen up 39 with the euro pound down 12 pips on the day. All right, one thing we do every week is we get you ready for the news. So we're going to be talking about that. We're going to be going through several different pieces on the news for today so you can have your news trading plan ready, whether that plan is to know when to be aware, get out, tighten stops, or whether it's to actually take advantage of the news and trade over on Nadex. If you don't have a Nadex account, Nadex is a U.S. exchange. It's regulated by the CFTC, Commodity Future Trading Commission. It's the same regulatory body that regulates the CME, pretty like the S&P and gold and all that. And they're located in Chicago. All your money is in a segregated account separate from corporate funds. Some of the big differences, everything has completely capped risk. And they have binaries, but they also have spreads. And a lot of people just think about the binaries when they think about Nadex. They don't know they have the spreads also, which are awesome products. And think options for day traders. Or think futures for day traders that want capped risk without stops. Or at least defined risk, either way. So less margin, less risk, capped risk, potentially no stop loss, depending upon how you want to do it. But no matter what, your trade is your stop, worst case. So there's always a cap on the stop. And it's only $100 to open an account. You can get a demo for free, $100 to open it. Just go ahead to TFNN.com, click on Nadex, and once you click on that Nadex banner on the right side of the page, go up to Trading, and then click on Demo Trading Account right there. Once you click on that, fill in your username, first name, last name, phone number, and email address, and click Apply for Demo. And check your email. You'll be able to log into your demo account right away and sort of see what it's all about. Okay? And if you want to get that demo extended, just fund a live account, just under the Create Account button at the top there. It takes about 5 minutes to go from start to funded. It's only $100 to fund an account. It's a deposit, okay? Not a fee. It's a deposit. And you can trade with less than 100. Of course, most people put 500, 1,000, a few thousand in at least. Some traders are putting in, obviously, very large, much larger numbers than that, easily six figures, stuff like that, just depending upon, the size of your trading account. And so anyways, hop on over there, open a trading account up, and if you place one trade, it doesn't matter if it's a 100 contract for $50 or if it's one contract for $3 risk or whatever, place one trade, and then you can email or call them, and they'll actually extend out your demo for another year. And even when you fund an account, you need to get your demo extended just so you can test things out and try things out. Live is a brutal teacher. Okay, it's people say experience is a great teacher. No, experience is a painful teacher. Often it's one of the worst teachers. There's definitely value in it, but it is not the wisest way to learn. So hop over on demo, make your mistakes there, learn what's going on there as you're trying to figure things out. They, of course, have education on their site, but, of course, over at TFNN, we also got education going on, and you can check out the Diagnostic Box Spread Analyzer and other tools that I've made available to help you get access for how to trade over on Nadex. All right, well, we got that out of the way, and where you can go to actually take advantage of this news if you don't just want to be aware of it, but you actually want to use it. Now, let's talk about, what's coming up on the roster, so that way you can put a plan together for the week. And looking at today, notice major high-impact, newsworthy events, mainly because most countries are still on holiday. We got, Switzerland and Europe and Britain and all that going on. There's a couple small announcements tonight, but nothing that major. New Zealand, Aussie, of course, they were on holiday yesterday. But nothing that big going on, just really quiet in the FX markets overall. A little bit different type of trading day. You always want to be aware of those holidays because they can throw things off some for you, okay? And we'll look at some of the markets, see how they've reacted. But let's go ahead and check out tomorrow. We got existing home sales coming up over here in the U.S. at 10 a.m. We're also going to have the Aussie CPI. So we can look at, those markets on existing home sales and Aussie CPI. That's going to be our main two announcements of the day. And just looking across them, on the initial averages, I'm going, hey, we're probably going Iron Condor on that one. We'll look at it in detail here in a second. On the Aussie, we're going to have to check out the last 12 months to make a determination. Okay? So, first thing, let's tack the Aussie. It's just a little bit easier one. And we also got a lot of earnings coming out, so we'll be talking about that. But let me pull up the Aussie dollar right there for you. And the announcement is scheduled to be released, so I want to make sure I get this right, is coming out at 9:30 p.m. Eastern Time. And so that's going to give you, basically, if you're trading Aussie dollar, you're looking at 10 o'clock and 11 o'clock spreads. That's really your two choices. So which one is going to be best is going to be the next question, okay? And from what I can see, I'm going down, I'm looking at the reports right now. Majority of the move on this report, some reports are like this and some surprisingly aren't. But the majority of the reports, it looks like most of the move literally happens in the first minute. Some of them they'll pop, but then they'll keep going. This one, over the last 12 months for the Aussie CPI, you don't really have much additional movement happening after that first minute. You might get another 5 or 10 ticks, maybe. So that being said, what are the stats we should be looking at? Well, 50% of the time in the last, 2 years, okay, it's exceeded 50 pips. And the average move is 50 pips. So that means we've had a couple big moves. But what has been the averages over the last 12 months from release to high, release to low? Well, looking at that right now, we're looking at about 35 pips, 19 pips, 30 pips. Let's see here, down 17, up, looks like about 21, so still, within the 20. We had one big move there on April of last year. We did have a 53 pip move, and then it pulled back to about 35 before it was all said and done. Let's see here, January last year, actually a couple of years back, we're going way back on this. We got about 40 pips on it, 50 pips on it. So we had some really big moves, but they were back in 2011, 2012. As far as our 2013 numbers, this has been a non-mover. Okay, we've got, like I said, 20 pips on moves. And that really would be my expectation. We've only had one big move beyond that, and that was, let's see here, right on there's actually the last report back in January. We had one big move. It moved up about 55, and then by expiration there, by 10 o'clock, it ran up to about 78, and that was the high. So we did have a big move on the trade. So how do you trade it? What do you do when the majority of them are small, but there are one or two that are big? Well, that's pretty much always the case. That's why you're playing probabilities. there's a couple choices. One is you could go in and you could put on a binary strangle. This is actually how I would do it. If I was going to do this, I'd do what's called a strangled condor, okay? You could put on a binary strangle literally minutes before the announcement. And you're going in and you're going for like that, 60 pip move, 50, 60 pip move. And your goal is to, put that, if you're going for a 50 or 60 pip move, then, you're going to have it narrow enough to where it would actually make some money. So you need to make sure that the only way this is possible is if it moves 60 pips, is your total cost on the strangle, is your total cost going to be less than pretty much $25. Okay? So if I buy one side for 12 and so another side for, 87, okay, or 77, no, 87, yeah. So if I go in there, have a $13 risk on one side, $12 on the other, that's $25. And this is the way I would actually play it, because the move on the Aussie dollar happens most normally on this specific report in the first minute. I would actually be looking to close my trade after that first minute if I was doing a strangle or straddle. And I'd look to get in, and I'm looking to literally get out like minutes later. So if it pops, awesome. If it pops a little bit but doesn't move that much, I'm going to get out. I'm going to just give away my bid-ask spread, which honestly is probably going to cost you about $10 of the 25. Okay? But I'm going to get out of that trade right away. Maybe you get break even on it. Maybe you make like, $12 on one side, you lose 12 on the other. That's probably the more likely instance. If it moves 35 pips in like a minute, the chances of you at least breaking even are pretty decent. But again, this is just like in first minute, close, out at the end of that minute. Okay? So that's a way you could strangle it. The big edge here is it gives you a little bit of a hedge in case it just flies. Okay? And I wouldn't actually put it at this is a little bit weird one, but I actually would not put in a take profit on this trade. I'd actually be looking to get out at the close of the minute. Just because usually those pops are pretty solid. There's a couple of them I see with wicks, but most of them, they're solid up or solid down moves. Now, my preferred strategy is actually going in and doing the Iron Condors. So instead of going in and putting up, we'll say, a binary below and a binary above, if we go in here and let's say we're doing the awesome, we, sold down here and we bought up here and we're expecting the, market to either shoot up or shoot down. That's a strangle, okay? Basically, I'm strangling. I don't care which way it goes. Just go one way or the other and go fast. All right? The other way is the neutral strategy. That's the Iron Condor. So we'll talk about that a little bit more when we get back. And we'll look at what other news announcements, including ones that are happening throughout the week, as we have the British interest rate announcement coming out. Or not the interest rate, but we'll talk about that right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so when we last left off, I sort of wrapped up the strangles there, and just buying a binary above, selling a binary below, giving it a minute, literally. Announcement comes out, minute's done, be done, okay? Don't hang around on that trade, because it's just going to decay, and it's probably only going to move another 5 or 10 ticks, which is not going to be worth the time, which means I would also choose the 10 o'clock binaries. I would choose the cheapest ones I could get, because I'm not looking for time. I'm looking for cheap, okay? And now on the Iron Condors, on the other hand, I'm actually looking for as much time as I can get, because basically time decay, etc. So I could actually be looking at the 11 o'clock. There's not really a big difference. I could hop in earlier, and that should work out okay for me. I'm actually looking at the pre-release here. And, how much would it impact you if you went in and you got in early on the trade? Meaning, let's say you got in at 6 o'clock on the 11 p.m.s. And from everything I can see, there would be very little impact. Meaning there's just not much at all. Like the activity that's happening previous to that, the market is very flat. So what would that tell you? One is hop in at 6 and get 11 o'clock premium. Get 5 hours of premium for doing the Iron Condors. The Iron Condor is really simple. You're just going in, you're just buying a spread below the market. It's like down here. Buy that one, and then you sell a spread above the market. And it looks a little freaky because the risk reward looks all distorted. But the reality is it'd have to move really, really far to matter, and you can get out of the trade. It's not like you're stuck inside of it, okay? And so right over here, if I sold this one, I bought the one below it. And let's say I bought it for, I'm just going to throw a number out here. Let's just say, since the average move is 50 pips, let's say if I could pull this thing off for $25 on each side. So I bought it 25 below, and I sold one 25 above the floor right here, that middle area, where basically the ceiling of the one I bought and the floor of the one I sold. Now, if I do that, I'm going to be thinking, man, there's $150 risk on this, and I'm only getting $25. That's $125. It seems huge. But let's look at the reality. One is both sides can't lose. It can only expire above or below or in the middle, but it can't expire both above and below. The Aussie dollar cannot be here and here at the exact same time. Okay, so only one side can potentially lose. Both sides could potentially profit. That gives us an edge. That means that it actually could go up. If we got $25 on each side, okay, it could actually go up 50 pips. And if that happened, I'd be break even on this one, right there, and then I'd lose $25. So the one I sold, if it went up 50 pips, I'd lose $25, but I'd make $25 on the one I bought. Therefore, I'd be at break even. So if it moved the average and it stayed, this is a big thing, and it stayed at the average, I'd break even on the trade. Okay? If it moved more than that, it'd actually have to move twice the average, which has happened, okay? But looking at the past, I've seen that happen. Let's see here. By expiration, once since 2011. Okay? One time in the last 3 years. What does that mean? Well, that means that I'd actually have a 1-to-1 at 100 pips up and 100 pips down. I could make a maximum of 50. I could lose a maximum of 50. So there's a little bit of a range here, again, going more than double, where I do have a little extra risk. But the probability of it going that far is extremely low. I mean, just like I said, one time in the last 3 years. And if it did, it's not like it's going to kill you and demolish you, okay? You lose, let's basically be 50, you lose $75 on a $50 potential trade. So it's not like it's horrible, okay? And I don't care if the Aussie goes 300 pips. You're still going to have that capped loss on the trade. So understanding that you have that capped loss there, that helps you out a whole lot. Understand that you're 1-to-1, 1-to-1. Now, that 1-to-1, there's a little caveat, just to make sure it's really clear. To get that full 100% profit, you'd have to expire right at the center. Does that happen? More often than you would think, but, are we counting on it? No. Okay? That being said, how often do we really expect it to move 100 pips? Not that much. So if it only moves 20, or let's say it moves 70, I'm looking to make $25 on the trade or lose $25 on the trade. That's really what I'm expecting my net result to be on this trade when I do an Iron Condor like this. All right, stay there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So we're talking about these Iron Condors on spreads. You keep hearing me talk about them, and I've tried every new strategy, I think, under the sun. I've had co-located servers on the floor, and, to try to get that millisecond edge, okay, when it comes out. With an automatic news trading software that I built in, and when this comes out, boom, it does this, an OCO with an OCO, and fires off, and trying to get in there first, and works okay, but I mean, in the end, it really didn't work out. Like, you basically lost pretty much. I mean, I didn't really lose a whole lot, didn't make a whole lot. I've done direct trying to read the markets and trying to hop in afterwards. That actually can work pretty well if you're good at reading the volume. And I still enjoy doing that now and then, but only with capitalist products. I wouldn't do it with actual futures. I also, I've obviously dove a lot into just options before I ever even heard about Nadex. And my main thing that I got started on it was actually day trading earnings. And it's funny, I remember one of my mentors going, "You can't day trade options. The bid-ask spreads will kill you." And I'm like, well, I've been doing it, and I grew my account from several grand to, over $30,000 in a matter of a few months. And I didn't even know. Like, this is so funny. Like, I didn't know you're supposed to have 25 grand in your account to day trade. It's a while back. And, I don't even know if the rule came out before or after. I'm guessing it came out before. But just the platform I was trading on didn't have the limitation set to limit me. So I was hopping in and out of trades like crazy every single day with only a few $1,000s. And worked great. Wasn't really smart. I was risking a lot of the capital every time. and wouldn't be a recommended long-term plan. And I saw that as I started making more and more. I'm like, I could lose all this in like 2 days. And so I had to get a little bit wiser. And but I learned a few things. One, with a small account, you definitely can grow it. 2, you want capped risk. 3, options is a great way to do that. 4, you don't have to have 25 grand to pull it off to do day trading. 5, you don't have to have insane leverage that's going to kill you, like on futures. And it took me a while before I even touched futures, because everything I read on them was like, either you have your discipline or you get killed. And I'm like, okay, well, I need to stay with options for a while. And then this was, a decade ago, because I'm like, I know I didn't have the risk management to do it the right way. And so eventually I got into futures and loved them, and option strategies, something like 70 plus option strategies. Probably use about a dozen of them on a consistent basis, and there's probably another dozen that I'll pull out of my hat now and then. A lot of other ones are just, I guess, cool to talk about. And the good thing about learning all of them is just learning how the options, how you can paint your own, canvas and make your own trade. And then I came across Nadex, and one of my first things was, hey, I can go in here and I could just strangle or straddle the news. It was just obvious. I can go both directions. I can go with capped risk. And so I started looking for just the high impact events. Hop over to something like Forex Factory or whatever and go, oh, wow, look at all these. The reds. That's what I'm going for, reds. Those are big. They say they're big. I'm going for that. I look at this SMQ. If you even see some of my past stuff, I'm looking at the SMQ, the seismic quake reading, what currency pair usually quakes the most, and all that stuff. It has the biggest move based on the pair. And it was good. It was okay. I did okay. But I was missing something. And I kept going for, I learned really quick, you got to go for that 1-to-1 because, you need that risk reward in your favor, if we can win, obviously more than half the time, and we can keep our risk at 1-to-1, then we will end up net profitable over a given series of trades, so long as we continue to maintain that probability and profitability ratio. But what I noticed, and I'm just trying to find just a random example. This isn't, don't worry about time frames or anything like that. But just imagine this right here, what we're looking at is, let's just say that's a news bar, okay? And what I noticed, what I learned, that I think anybody who's traded on Nadex has learned, is the market would come out, it would shoot up, and you better take your profit, because if you don't, it's coming on back down. And you know what? That is a great strategy for FX pairs that consistently have a lot of volatility on certain news announcements. And there are a few that I still do it on. But the ones that consistently have a lot of volatility on certain news announcements, usually that 1-to-1 gets pushed higher and higher because the premium gets more and more expensive. And so me and some other traders, we were trading with all, we were like, okay, maybe we should go for 0.5-to-1, maybe we, 0.7. Just get in, take the easy profit, hop out, and, risk $100, risk $1,000, risk $5,000, whatever, make $2,500. Hey, call it a day. Not bad 5 minutes. Except for when you lose, then now that it's wiped out, two profitable trades. And I looked at doing the binary butterflies. It's like, okay, so that's a good strategy. I kept going with that. Started looking at the binary butterflies. And on the binary butterflies, it's basically instead of buying one that's above and selling one below, I'd buy one below and sell one above. And on that, let's say if I could get $50, okay, if I could buy one for $75 and sell one for $25, then I could, no matter what, I'm going to at least make $25 on one side, lose $75 on the other. Worst case, I lose $50. Best case, I make $50. And there's definitely an edge, because if it expires anywhere in between here, remember I said on the Iron Condors it had to expire like right there at the center, right? If it expires anywhere in between that range, I get to keep all $50. Downside, if it expires anywhere above, like even by a tick, I lose $50. Okay? And I'm like, okay, well, to limit that down, I could put a stop in if it hits my strike. But then you know what happens? I mean, it goes up and hits your strike, and then it falls back down. Right? It gets really annoying when doing the butterflies like that. So I'm like, what else could I do? And I'm like, well, I could try the spreads. So I started going to spreads and doing straddles. You know, I'm like, okay, I'll just do the spreads, because then it doesn't have to move as far. If I do the strangles, I have to move really far. But if I do the spreads, you know, if I only get, you know, a little bit of a move, I can easily break even. And to this day, they are still my preferred. If I have a choice between the two, I prefer the straddle, buying a spread above, selling a spread below, over a strangle, buying a binary above, selling a binary below. But then I started playing with the math on the Iron Condors, and you really have to look at it because it's completely counterintuitive. And I started figuring out that the reality is all the traders that were, all the trades that I lost, and even many of the trades I won, doing straddle trades or strangle trades or butterfly trades, could have been profitable still doing a neutral strategy. So the trades I won on the straddle, where I'm saying, hey, it's going to go far one way or the other, still could have potentially been profitable doing the other strategy. And so if we move this down a little bit to make it more lined up with like what a news announcement would look like. Like I said, don't worry about prices and time. Just the bar chart, or the chart pattern. Here's what we're looking at. And so I put this on, and I'm like, you know what? If it goes up, if I get, say, $50 on this thing, it goes up $50, I break even on the trade. Now, if it only goes up 45 and it stops there, I'm only going to make 5. I still made 5. Now, on the flip side, compared to like a butterfly, if it goes up, 55, I'm only going to lose 5. Whereas a butterfly, I'm going to lose all 50. Okay? So, yeah, my payout gets a little bit lower if I don't expire right back at the middle, but my loss is not nearly as leveraged against me because it's only $1 a tick per, contract you're doing. And so I started realizing, I really am able to stack these odds in my favor if I'll go in and do this, because now all of a sudden I got like break even up to here, and I have a break even, 50 pips down. And if it expires anywhere between these 2 points here, then I'm able, if it'll expire above this, I'll make $1 for every tick above, or every tick below that break-even point. So let's say that's my break-even point right there. We go up here. We'll say this is my break-even point. We'll just say right here. Okay? For every tick below that, down to the center, I'll make $1 per contract. For every tick above this, up to the center, I'll make $1. So, am I going to make max profit? Probably not that often. Do you make max profit on anything? Not usually. Okay? That's not the best way to trade anyway. But now I have a large range up and down that I can make a profit in as long as it's in between it. And if it goes outside of it, if it goes up here, it'd have to go like all the way up there for me to lose my maximum, 1-to-1 potential. And there's probably about as much probability of me losing that as there is. There's probably a better probability of me getting 1-to-1 and then coming right back down than there is a probability of it going all the way outside of it. More often than not, it would be closer to the center than it would be outside the range. So I have this massive break even. I only lose $1 past the break even. It'd have to move like double the expectation for me to lose 100% of my potential profit, and which gives me room. I don't have to worry about like getting out of the butterfly when the strike gets hit. I don't have to worry about taking that profit because it's going to pull back. So what if it's not a big announcement? And like a straddle, like it pops up, you could make money. So that's where I talked about the strangle earlier in the show, and I said, hey, it pops up, you got 1 minute. At the end of that minute, close it and take a hike. Get out of the trade. So either you made money or you probably broke even on the trade, but don't hang around. I just put it on. I literally just let paint dry. I just let time decay take care of it. Now, I may put a take profit on each side, so if it, flies up here, take a little bit of the profit, and then if it comes back down, maybe down here, I can take some of the short profit off on the trade. I mean, that's an option that I can go and I can exercise that, and it's pretty good, especially if it's a big volatile announcement. But just the reality is, most news announcements, even though they do cause, most of them, this is not at all, but most of them, even though they, will cause like a 50 or 70 pip move, usually that move is built into whatever that break-even price is. Okay, so if the expected move is 70, you'd be amazed at how often it could easily be $70 risk. So if it moves 70 but pulls back, you'd actually make money if you didn't do the straddle, if you did the Iron Condor, if you did what I'm talking about. And so most big announcements don't have insanely massive, larger than expected moves built in. They have to be a really big shock to the market. So it's a very rare instance where it will just explode, but it is a very common instance where it will actually come back easily inside that range. And when I say, like, I'd go through an announcement, I'd say, hey, average move on this, 70 pips or 100 pips, high to low. Well, one, that was high to low. It's not announcement to high, announcement to low. And two, that could easily be a lot of like 20 and 30s and maybe a couple like 150s, like just really just out there massive moves. But again, it's capped risk. So the probabilities completely go in your favor by collecting the premium. And if you traded options, you know that usually the best way to consistently make money option trading is just collect premium. And so this is the best strategy I've found for trading the spreads for premium collection. It's a range-bound strategy. And there are a couple different ways to do them. But, out of all the strategies, I may just go directional, and trade the spreads actually for premium collection. I laugh. Some traders will come in, they're like, man, I've tried trading, those Nadex spreads, and they just don't move fast enough, and it moves, and I end up losing, like, every time. And when they tell me that, I'm like, so why don't you just do the opposite? I'm like, what do you mean? I'm like, well, instead of being the guy that's buying when you got a buy signal and it doesn't ever move far enough, why don't you be the person that's selling and collect that premium from the guy that's buying? Because Nadex is trying to, Nadex isn't doing anything. Nadex is an exchange. They're not taking the other side of the trade. Market maker is there. And they're like, well, the market maker's trying to hose me. It's like, no, he's not. I mean, he or she or whatever. The market maker is just simply balancing their risk by looking at the expected move built into any given market. And they want to get in and out of bid-ask spread. They want to be delta neutral on their trades. And, yeah, they want to make money, but they'd actually prefer that in the end you make money by it loading off to another trader. Because the longer everybody lasts, the more they make bid-ask spreads. Okay? And the pricing model lines up perfectly with a Black-Scholes model on a spread. You can pull up a spread, and you can pull up a call. And let's say this is a box spread right here, this little range I got over here. And if this was the upper spread, it would look like a Black-Scholes model right up to the center of the spread on a call. And then it'd be a Black-Scholes model on I guess it would be a sold put right down here to the center of the model. So it's sort of like you have like a bought call and a sold put. It's not a bought call and a sold call. It's sort of weird. It's the way it works in the cap out and everything else. But you think it'd be a bought put or whatever, but I mean, it's just the way the math works. And putting in the money one in there and all the other stuff. I mean, it's we can sit down, we can go through all sorts of option analysis with it. But bottom line, that's how the model works. It's a pure Black-Scholes model. I'll pull up literally the S&P 500 on Friday. I'll look at the S&P E-mini future options. I'll put them side by side next to Nadex US 500 spreads, which are a derivative of the S&P 500 E-minis. And they will have the exact same risk, give or take a couple bucks. Okay? Do 5 spreads and do one S&P E-mini, because one S&P E-mini is 50 options. And so that's the way it all ticks to make every dollar worth the same amount on a $1 move. You need one S&P E-mini, you need 5 spreads, or one S&P E-mini call and 5 spreads. They have the same strike, the same floor. They'll line up right there. Little commercial break in the middle. Anyways, but the pricing model is right. It's just it's understanding it as a trader. It's like saying, I bought a call and they hosed me because, man, it just didn't move fast enough. Well, you bought one that was way, like 20 points out of the money. Yeah, it didn't move fast. And as I started understanding what does move fast, what doesn't move fast, and started applying all the option stuff that I learned over on Nadex, it didn't have to have all the complexity, but just the concepts of how was I trying to make money on theta, on direction, on, delta, okay? Well, I'm trying to make it on gamma. Am I trying to make it over on interest? Not really, because there's only a day on any given spread. Or am I trying to make it on implied volatility? And these Iron Condors on news are a combination of IV and theta. And the reason I say that they're a combination of both is if you try to do them like any time of day, they won't work. The time decay alone is not enough. So we'll talk about those two differences when we get back from this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So, anyways, but let's talk about the news trades, use implied volatility, and because there's a lot of expected movement, and the time decay by trying to get in early as possible. So you need both. If you just have the time decay, a lot of times there's not enough to do Iron Condors on the spreads. That's usually a better butterfly trade. Did want to make an announcement before we wrap up here, but it looks like Nadex is announcing right now that Group 1 futures trading is coming on as a market maker. They are active now. They joined the exchange, and they actually, Group 1 and its affiliates form one of the largest privately held option trading firms in the United States. Group 1 will make markets in a wide range of popular contracts listed on Nadex, including stock index and commodity futures. Nadex anticipates that the addition of Group 1 to... Here, I'll just go ahead and put the article up here. Nadex anticipates that the addition of Group 1 to existing market making on the exchange will provide traders with tighter spreads and increase liquidity. And it will, because obviously more market makers, more contracts being offered, and they want to get filled. Remember, they're trying to unload the contracts, so they stumble over each other a little bit. That tightens up your bid-ask spread. So, anyways, but they're going, they're rocking and rolling. And looks like provide deeper liquidity for some of the most heavily traded markets like the S&P, the Dow, gold, and awesome. So that's great news. And you heard it right here, Diagnostic Trading Hour first. All right, y'all have a great day. Bye.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.